Good morning, everybody. Hey, welcome to Thursday, April 29th. Can I tell you that April is pretty much gone in the books? One more day of the month of April is turned for as far as the markets are concerned. And so it's been quite the month, to say the least, as we look at where we are and where we may be going today. I mean, earnings season's kind of in full blast. We've got a pile of earnings to talk about this morning. We'll have jobs numbers coming out. I mean, just a lot of stuff today. Excited to get on the phone with Dave here in just a few minutes. Before we do that, though, please let me remind you that there is only one thing that any of us can control when it comes to our portfolio, and that is how much risk do you have? And the question is, do you know how much risk you have in your portfolio on a scale of 1 to 100? 70% of the people I sit down with have no idea. And that can be dangerous as you get closer and closer to retirement, or especially if you're already in retirement. So folks, please give us a call at 863-382-0037 to schedule your financial x-ray. Hey, we're getting ready to get on the phone with Dave right now.
I'm here. It's 8:40 now. 20 before 9. Time to check in and see how your retirement funds are treating you today on Wall Street. And to do that, we always get help from Statler Financial Services' very own Phillip Statler, who's standing by on the phone. Phillip, good morning. How you doing today?
Hey, good morning, Dave. Doing well today. It's Thursday, the 29th, and I am actually at home today because today starts my 2 days of Ed Slott continuing IRA training. So we'll be in virtual meetings the rest of today and tomorrow, getting updates on IRAs and those type of things. So hopefully this is the last virtual conference we'll have. Hopefully we'll get live by the end of this year.
I believe it probably would be a nice thought to see all those guys live, especially Mr. Slott. And I got to believe that right now a lot of your training and information is going to be, well, if A happens, here's an idea. If B happens, here's an idea, because we've got a boatload on the agenda in Congress after President Biden last night, don't we?
Oh, you're absolutely right. There's going to be some of that tax planning coming into play there because of just what you said, tax rates going up, especially on the wealthier folks out there. So, and they usually have the larger IRAs. So how do you plan around that? And hopefully we'll get some key things to start to look at and do some planning.
Without a doubt, it's going to be an like the old Jewish wish was, may you live in interesting times. We're getting them for a few months in here, aren't we?
Yeah. Hey, I'm gonna say they started about a year and a half ago, right?
I suspect you're right. Boatload of financial information off. Kind of an off day yesterday on Wall Street. Not catastrophic, but 0.5% off on most of the major indexes. Gross domestic product, our first serious look at the first quarter, a 6.4% rise in the GDP. One of my sources make that a slight surprise. Your expectation listing pretty much makes it a very slight miss, doesn't it?
It does. I mean, we were expecting every place I looked for my trade numbers. There's probably 2 or 3 different places I looked at, had it coming in at 6.5%. It came in at that 6.4 number. Now let's don't take anything away from 6.4 is still a great quarter. Just slightly off of what some of the economists had expected.
Understood. And kind of backing up the fact that we're growing handily, although maybe not as fast as we'd love, consumer spending in the first quarter, we didn't have any expectations on this, but I got to believe anytime consumer spending goes up by 10.7% in a quarter, somebody's got to be happy with a number like that.
You're right. I mean, anytime we see spending go up by those kind of numbers, it's got to be good for the economy because our economy is based on people spending money. And let's remember that over the last month or two, people have gotten another stimulus check. So that could be some of, and plus they've gotten their refunds from IRS, right? So that could be some of that spending money coming in there too.
Some of it, I'd imagine, would be the IRS. The first quarter wouldn't measure the stimulus checks, but yeah, it would be it would be nice if it was just the natural economic demand coming back, but some of it, I suspect, probably is IRS generated. Usual stuff that comes out on Thursday. First-time unemployment claims close. It was an improvement over last week, but not exactly what we'd hoped for. 553,000. And you had a slight increase in the number of continuing claims as well, didn't you?
Yes, sir. They came in about 10,000 more than expected. Last week they were at 3.65 million. Now they're at 3.66 million, up just a tad for continuing claims. But still, that number is getting relatively low. And it's going to be interesting to see what our unemployment number comes out for the quarter.
It certainly is. And given the fact that it's a 1 week snapshot, a slight amount of wobble isn't something to really get panicky over. It just, you can say, oh, shucks, it's not going in the direction we were hoping for, and kind of let it sit at that.
That's right. And because there's a lot of stuff coming out that's going to indicate on the indexes and on the futures as we get ready to start the day.
Absolutely. And that was just a sample of the data flood that we got out of the federal government. And to add to the flood, we're in the middle of earnings season, and the household names are coming out in mass right now, aren't they?
They really are. I'm going to tell you, Dave, I'm having a hard time finding anything that didn't do well. But there does seem to be a theme of an industry that's not doing well. So let's start with the negatives first today. Right. And that would be pharmaceutical companies. So it's really, because here's the reason: you still don't have people going to the doctor's offices. So
I suppose that makes sense. It's counterintuitive on its face, isn't it?
It really is. But we had Merck and Bristol Myers both reported, and Merck missed by about 23 cents a share. So they got hit pretty hard from that standpoint. Bristol Myers, they missed by 7 cents a share. Revenue for both of them was below expectations. So we look and say, okay, well, what did that really do to the stock price? We had Merck's down 1.9% this morning. Bristol Myers is down a little over 2.5% this morning. So those two companies in that industry seem to be where the negative stock prices are starting to kind of flow in from.
Okay. It's hard to play a violin for Big Pharma having a rough quarter, but still, if it happens to be in your IRA, it isn't what you want to hear.
That's absolutely right. Now let's go to the winners of the day. Hey, I'm going to say this has got to be probably the biggest winner I've seen today, and that's Facebook. Facebook beat expectations by over $1 a share, and they came in about 30%, 34% more than expected on earnings. They're expected to come in at like $3, or they came in at $3.30. So they're expected to come in at like $2. So really 50% more than expected. There are a few flies in their ointment, but it's not not hurting the stock price this morning. They did come out and explain that with Apple's new privacy policy, that at some time this year, it's going to put some pressure on their ad revenue. Probably not this quarter, but one of the quarters coming up shortly. Definitely not hurting their stock price today, up 8.3% this morning, and a new 52-week high.
I feel sorry for them, not the least, that my Apple phone no longer lets them know where I am at every minute of the day.
I know. We kind of appreciate that, don't we?
And I don't even particularly care if they track me. It's just, hey, don't snoop too much.
That's right. That's right. So let's just go to Apple, right? So Apple, they came out today, earnings at $1.40 a share. That was 41 cents better than expected. Revenue topped estimates. They had a better profit margin, but they did come out too, just like everybody else is coming out with some issues, and they're having some chip issues, right? I mean, they saw demand in their 5G phones, but they're still having some chip shortage, and that's going to have a negative impact on them this coming quarter. So that's one of those things that we're going to hear a lot about, I think, in a lot of different industries. So they're up a little over 2.5% this morning. We've got,
if you're as big as Apple and you can't beat the chip makers into putting you first in line for the limited supply there are, that really indicates the problem, doesn't it?
Well, it really does. And so let's go to another place that seems to be an issue, and that's Ford. Ford had a great quarter. I mean, they came in at 89 cents a share. They only expected to make like 21 cents a share. So they really and truly had a great quarter on both bottom and top line. But they've come out too, just like Apple. Hey, our second quarter production could be half of what it should be this quarter because of the chips. And they're taking it a little bit more on the chin than Apple was. So they're down 3.7% this morning.
I was thinking with that kind of a beat and to see a 3.5–4% decline, that's more than the chin they took it on. Wow.
Well, yeah, but that's it. I mean, it's a supply chain issue that a lot of these companies are dealing with going forward. So we had Caterpillar. They're kind of a good indicator for construction and improvement and that type of thing. They beat by nearly $1 a share. Came in at $2.87. Revenue was ahead too. They continue to look like they will do well, especially the infrastructure bill working its way through Congress. So they're up 1.7%. Not quite a new 52-week high, but they're getting close.
Cool.
And then
couple more.
McDonald's. I found it interesting. I was listening to the news yesterday. McDonald's in Tampa is actually paying people $50 to come do an interview. Yeah. But they beat by 11 cents a share. Revenue top forecast as well. Get this, Dave. Same restaurant sales up 13.6%.
Holy crud.
Yeah.
Amazing.
Really good numbers. Not helping their stock price a lot today, up about 1/3%. And then let's close out, because we are getting close to hurricane season. Let's close out with Generac. Generac came in and beat by over 50 cents a share. Revenue real strong also. They're being helped by the residential construction industry and people putting in generators and that type of stuff. And so they're trading up today 8%.
I saw them toward the top of my winners list, and I figured it had to mean they'd reported, and it was good news. Resetting the table for the morning. It was an off day yesterday, not a big one. 165 down on the Dow, which was less than 0.5%. S&P was off by a little under 4, and the Nasdaq off by 45 minutes before we opened up this morning. I think there's a turn in the trend. Phillip, how are we doing?
Man, we're moving upward pretty well today, Dave. We got the Dow up almost 0.5%. The S&P 500 is up 0.75%. And then the Nasdaq's up over 1% this morning, about 1.1%. Commodities, I must say, doing the same. Silver's up 1.3%. Gold's up 1/3%. Now, Dave, this is some bad news, though. We've got crude oil up 2.2% over 65 at $65.27 a barrel right now.
We're just not going to think about that.
Not good. Not good.
No,
I'm glad I got gas yesterday.
And I forgot, which is why I don't want to think about it, because I got a hunch I'm paying more today. Overseas markets, Asian Rim was up fractionally at the close early this morning. Not big, but everybody was up about 0.5%. Europe is looking at our progress. They got a mixed bag, but still mostly up midway through their trading day. Phillip, I need advice to make sure my retirement fund is taking advantage of the risk factors that are there to grow, but at the same time not risking too much. How do I find you to get that happening?
Evan, give us a call at 863-382-0037. They can also check our website, statlerfinancial.com, and then please join us for this weekend's Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30.
All righty, and I look forward to fresh new tax information tomorrow morning.
All right, man, you have a great day.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. From the pitch.
Hey, folks, I want to thank you for joining us today as we get ready to close out April tomorrow. Hey, we'll be with Ed Slott most of today. and tomorrow, but I'll be back on the radio with you guys tomorrow and here on Facebook. Have a great day. Look, if you are getting close to retirement, as a service to our listeners, we'd be happy to sit down and answer any questions you may have. Give us a call, 863-382-0037. Hey, until tomorrow, have a great day.